So when starting a business, one of the crucial aspects to consider is funding. Now, securing adequate financial resources is essential for launching and sustaining any new venture. Now, there are various funding options available, each with its own advantages and consideration. So in this video, we'll talk about some of the common funding options available and discuss the significance of financial planning, budgeting, and forecasting to ensure that any new venture you start is a successful business. Bootstrapping, well, it's an unusual term and not used very much, but bootstrapping refers to starting a business with personal savings or relying on the revenue generated by the business itself to grow the business. Now, this approach allows entrepreneurs to have full control over their venture, but it may limit the scale and especially the speed of growth. It's a viable option for small-scale businesses, side hustles, or those with minimal upfront cost. Now, taking out a loan is a common way to obtain funding for a business. An aspiring business owner can approach banks, credit unions, or other financial institutions to secure loans based on their creditworthiness and their business plans. Now, loans provide a lump sum that needs to be repaid with interest over a specific period. It's important to consider interest rates, repayment terms, and the impact of loan repayments on the business's cash flow. Grants are non-repayable funds provided by governments, organisations, or foundations to support specific types of businesses or activities. They're often awarded based on eligibility criteria and the alignment of the business with the grant provider's goals. Now, grants can be highly competitive and usually require a well-crafted application highlighting the business's merits and potential social or economic impact. Now, investors, well, this could be the bank of mum and dad, or you can seek funding by attracting investors who provide capital in exchange for equity or shares or ownership in the business. Now, investors can be individuals, venture capital firms, angel investors, or even crowdfunding platforms. Now, this option requires convincing investors about the business's growth potential and often involves sharing decision-making authority with those investors. Now, it's important to find investors who align with the business's vision and can bring valuable expertise or networks to the table. Financial planning, budgeting, and forecasting are vital components in managing the successful business and obtaining loans or grants or any kind of funding. Now, why do they matter? Well, financial planning involves setting financial goals, identifying the resources needed to achieve them, and developing strategies to acquire and allocate those resources. It helps business owners with the financial feasibility of their business idea. That helps them make informed decisions and determine, well, how much funding do they actually need? So financial planning also encompasses aspects like cash flow management, risk management, and contingency planning or budgeting. A budget outlines projected income and expenses over a specific period. It serves as a roadmap for managing finances and helps entrepreneurs allocate resources effectively and by value. By creating a budget, businesses can monitor and control their spending, identify potential cost-saving opportunities, and ensure they have sufficient funds available for any activity. Budgets should regularly be reviewed and adjusted as the business evolves. Now, forecasting involves estimating future financial performance based on historical data, market trends, and industry analysis. It helps businesses anticipate revenue, expenses, cash flow patterns. It provides insights for decision making. Accurate forecasting enables proactive planning. It identifies potential financial gaps or opportunities and facilitates the adjustments to business strategies. Now, part of understanding funding, forecasting, and budgeting is the ability to read your very own financial statements. Now, if you look at this video, it'll show you how to apply what those financial statements say to better your business. I'll see you over there. Thanks for watching. See you next time.